Hey, everybody, and thanks for being here today on my Zoom call on this 5th day of May. I am with my wonderful tax accountant, Nicola Price, and we are talking about that subject that we all just love to talk about, and that's taxes. And we all know that we've gotten an extension on our taxes due to COVID, but that extension is getting ready to creep up on us, that new deadline. And I thought Nicola could be here to answer some great questions for us. I am a realtor with Letty Ann and Associates Real Estate Services. For those of you who don't know, I'm a sole proprietor. So Nicola's going to be answering a lot of great questions for those of us who are sole proprietors and also people who just are paying their taxes this year, as we all have to do. So Nicola, thank you so much for being here. I appreciate this information so much that we're going to share with everybody. Let's start in with our first question, and that is about these new deadlines. And something new just happened recently that even changed again. So share that with us if you would.
All right. Okay. Well, thank you, Judith. Thank you so much for having me. Yes, as we all know, due to the COVID-19 crisis or pandemic, the IRS has extended the tax deadlines from April 15th to July 15th. So it kind of stretched it out for 3 months. So everything that would have been due April 15th is now due July 15th. So that would be your estimated tax payments first and second quarter. Any other deductions or things that you would do to lower your liability. So for example, you have up until 4/15 to max out your retirement account, and it'll count towards 2019. So that is also been extended until July 15th as well. So any contributions into your retirement account that you make up until July 15th, you can use that towards 2019. So.
Very good. That's great information. And one thing that Nicola shared with me right before we started this video that was a little shock to my system was that my first and second estimated taxes are going to be due the same time I pay my taxes. Is that right?
That's right. That is right. Yes. First and second. Yep. First and second estimated tax payments will be due July 15th.
In addition to if you owe any taxes, which as sole
Yes.
proprietors we normally do. So that is just when I thought we were going to get a break. It's kind of, wow, that's going to be a hit. So
yes,
prepare yourselves, folks, for that one. On the
Absolutely.
retirement extension, I love that the 401k, the IRA was extended. What's the maximum on that, Nicola?
I believe the maximum is 5,500 or 6,500, depending on your age. So if you're catching up, you can. It's a little more. I think it's 6,500 is the max if you're catching up. Yeah.
Well, that's good to know that that's been extended as well.
Yes.
That's nice.
Yes,
so if you need that extra little help in getting those taxes down a little bit more. So another question we talked about was the stimulus check, right? So we're all excited,
Yes.
those of us who are qualifying for that, to get that. Is that considered income?
Okay, so the stimulus payment that was put into place by the CARES Act, so that is $1,200 for single individuals, $2,400 for married individuals, married people, and then an additional $500 per child under 17 years old. And so everyone will be eligible for this payment. So so if your AGI is $75,000 or less as a single person, then you will be eligible for this $1,200 stimulus payment. As a married couple, if your AGI is $150,000 or less, then you would also be eligible for this stimulus payment. Now, there's a lot of questions about when will I get my stimulus payment. And so a lot of people may have already gotten their payment. Those being people who would normally get a refund every year, they would likely have already received their payments, and then followed by people who get Social Security, disability, railroad benefits, things of that nature. And so lastly, it would be people who may owe typically at the end of the year. And so they would likely be the last ones to receive their stimulus check. And so they're issuing those based off of your AGI. So the individuals with the greatest need would get it first. So they're issuing it by in tens by your AGI. So the first set of checks would have been like 10,000 to 20,000 of your AGI, and then it would have the following week would have been 20,000 to 10,000 individuals with the AGI between that threshold, and so on and so forth.
Okay. Okay, very good. So AGI, as we all know, is adjusted gross income.
Yeah.
And then is that once we get it, I am one of those individuals that has not received mine yet. I keep bothering you about when am I going to get it? But eventually you are assuring me that I am going to get that at some point. I am looking forward to that.
Absolutely. Yes.
But when I do get it, Nicola, and for my taxes next year, do I have to account for that as income or not?
That's a good question. That's a good question. So the $1,200 stimulus is not taxable income, so that will not be included on your taxes for next year.
All right, good news.
Yes.
There's a piece of good news.
Yeah.
Nicola, we've had many chuckles and laughs, haven't we, over all of the good news?
We have.
Good. You're so good. You are, I don't know how you retain it all, but you do, and I appreciate you. So we're going to kind of segue into deductions, because it's like, for me, it's like cooking a turkey. You know how every year I'm like, how do I do that? But I do it every year, right? So I forget what little deductions that I can take that I've forgotten about, and sometimes it changes every year. So talk to us a little bit about, as sole proprietors, realtors and other sole proprietors, what are those kind of deductions that we kind of forget about maybe sometimes or overlook?
Okay, sure. So, so the IRS allows individuals to deduct expenses that are necessary and ordinary in your trade. So as a realtor, that's kind of broad because you do so many different things throughout your day, and you incur so many different expenses. So basically just about everything that you incur as an expense in your day-to-day is deductible as a realtor. The IRS has kind of like a profile of what this person would look like, how much this person could make in different geographical areas, and what they're likely to spend. So they kind of have an idea of what a realtor's tax return would look like in the Midwest, for example. So they kind of have a profile of this already. So anything that's necessary and ordinary for you to do your job is a deductible expense. Yeah, so for example, if you decided to bring along your pet, so say you had a pet, a dog, a puppy, and it's a good marketing tool. It's a part of your business. So that would be a good example of an expense, something that you might not think about, but a good expense for your business. If you take it along with you and you use it as marketing and have the little jacket with the logo on it and things like that. So
Seriously?
yeah.
Okay,
Yeah.
this is news to me. Wow. Okay, I have a question about my meals. When I'm out doing business and showing houses all day and I have to stop and grab a meal, can I deduct my own personal meal? Or is it just the meals? Because this whole entertainment thing changed as well for our clients, as you know, and as a lot of people may know, that we can no longer deduct meals. Wait, no. We can deduct meals, but like we can't deduct if I buy them tickets to the Royals or something. Is that right, Nicole, or how does that work?
Yes, that's right. So you can't deduct if you want to treat your client to tickets to a Royals game or something of that nature, then that is no longer deductible. And even gifts. So gifts are limited to $25. So if you spend more than $25 on a gift for your client, then you can only deduct $25 of that.
Yeah, I
So yeah.
remember that changed, and normally we spend significantly more than $25 for clients, so we're eating
Yes.
a large part of that. What if I take them to lunch and we discuss business? What percentage of that lunch can I deduct?
Right. Good question. So you have a business meeting. So I would consider that a business meeting. And so if you're taking your client to lunch and you're discussing business or signing contracts over that lunch, then it's considered a business meeting, and that is fully deductible.
Oh,
But if
okay.
you're just taking your client out to lunch, um, just to kind of give them an introduction of who you are and get to know about them, or not really discussing business, then it's a 50% deduction
50%.
at that
Okay.
point.
Okay, then I'm going to give an example. We spend a day looking at houses, but we stop for lunch. And at lunchtime, we're reviewing the houses that we've seen up to lunch. Would that be a business meeting or not?
Yes, so yes, that would
Okay.
be considered a business
Okay, because
meeting.
that's usually that's the way I operate usually when we're stopping for lunch during the day.
Yes.
Okay, very good. And then the other real question I had is, as sole proprietors, we do pay for our own medical insurance. And I have, our deductibles are normally high to get our premiums down. And I know I had medical expenses, but they did not exceed the standard deduction, which is what, Nicola? So I took that deduction instead, correct?
Yes, yes. So the standard deduction is 12,200 this year.
Okay.
And so if your personal expenses such as medical, investment losses, charitable deductions, things of that nature, if
Right.
that doesn't exceed 12,200, then you would go ahead and take the deduction because it would be more beneficial to you.
I see. So that includes his tax losses or stock losses and church contributions, right? Under the
Yes.
same umbrella of medical expenses. That's the whole standard deduction.
Yeah, yeah. And the thing with the medical, so it's deductible once it reaches 7.5% of your AGI. So anything over 7.5% of your AGI is deductible.
Oh, okay.
Um,
So basically you take your AGI times 7.5%. That's what you can take above and beyond the 12,500 as a full deduction. Is that right? Did I say that right?
right, right, yeah. So yes, that's right. So 7.5% of your AGI, and then your total expenses. You compare those. So yeah,
Okay. All
that's right. Mm-hmm.
Good, very good. What about car? What's the mileage this year for 2019? What's the mileage deduction, and what does that include the insurance and like my oil change, or if I need new tires, because that's where I live in my car?
Right, yes. And so mileage expense is a good one. That is 58.5 cents. And so you can either deduct your mileage or your total expenses. So your total transportation expenses. So that would include gas, maintenance and repairs, such as oil changes, maybe new tires, insurance, things of that nature. So whichever one is more beneficial is the one that you would take, either the mileage or the actual expenses. For that to work, you would pretty much need to keep track of your total mileage for the year, and then compare that to your business mileage. And whatever percent of your business mileage is of your total mileage is what you would use to figure your actual vehicle expenses.
Not very confusing at all, is it?
No.
Not very confusing. Okay, so let's see, I thought of a question under that, and that was, what do you find people do more often? That's what it was. What do people do? Do they normally just take the standard deduction, because I am not going to keep track of all that other stuff?
Right. Yeah. More often people will take the standard deduction.
Okay.
Mm-hmm.
That's kind
Yeah.
of, and it's pretty good. I mean, that's a pretty good standard deduction.
Yeah. Yes.
Okay, so let's go into, I had a question this year because I have a home office. I'm sitting in it. It's only a portion of my home. So what we did is we took all of my expenses, we took the size of my office, and then we did a formula there. And what does that look like for people who do have a home office, Nicola? What are the rules and all that?
Yeah, so that's kind of the same. You would figure that kind of the same way that you would do with your mileage. So you have to have the square footage of your home, and then the square footage of that office space. And so that percentage is the percentage that you would use to take the deduction for your rent or your mortgage, utilities, things of that nature.
Okay. Okay, so keep track of all of those other expenses, including your insurance, right?
Yes.
And and then, of course, any interest expense on your mortgage is deductible as well, a percentage.
Right.
Okay.
And this deduction is only good if you have positive net income. So if you have a loss, then of course this wouldn't help any, but only if you have positive net income.
And hopefully we all do.
Yes.
Yes. Okay, that's good. That's good. Anything else under the deductions that we sometimes miss or forget about that you will ask? Sometimes you'll ask me, well, did you have any of this or that, or did we kind of cover that?
Yeah, I think we kind of covered that.
As realtors, we have lots of fees. We have fees. We pay KCRER here in the Kansas City metropolitan area. We pay our broker fees. We pay our license fees. We pay all kinds of fees.
All kinds of fees.
We do. We have a lot of fees. So how are those fees taken? Are they taken as a whole, or are those a percentage also?
Those are taken as a whole. So yeah, those are taken as a whole in addition to your traveling. So if you travel to a convention or a seminar in Florida, then yes, that's also a deductible expense. That the flight, the hotel, your meals, your rental, all of that.
100% deductible.
100%.
Yeah, that's good. And I am going to leave Nicola's information at the bottom of this link so that feel free to call her. She is so great, and she's a wealth of information, and she just really knows her stuff, and she keeps up on what's changing all the time, right? Because even from when we talked, 2 weeks ago?
Yeah.
Like that good news you shared at the beginning. So then we talked about the other thing we were going to talk about. Our last subject was going to be the PPP, and you said, Judith, you can apply for this as well. So tell me more about that, because I had no idea.
Yes. So the PPP was born out of the CARES Act. And so it's basically a grant slash loan. And so originally it was more commonly thought to be for employers who have employees. And so it's to protect those employers to be able to maintain their staff. However, this is also applicable to sole proprietors. So people who work for themselves, contractors, realtors, things of that nature also qualify for this PPP loan. So if you use it, so for the employers, if they use 75% of this loan towards payroll costs, then it's forgiven. It's essentially a grant. Now for sole proprietors, they are still kind of issuing guidance as to what that would look like for us.
Okay.
And so we're really not sure of that part yet, whether that could be forgiven and what that looks like for sole proprietors right now.
I see. So be careful because you might have to pay it back, is what you're saying, or count it as income, or will it be a forbearance, which is something that, you know, you have to pay it back, but you can pay it back later or down the road, right?
So yeah, so for those who do get it and they've already determined that they're going to use it as a loan because they're going to use it for other purposes. So the payments will start 6 months from the date that you sign a contract. It's a 1% interest rate, and the term is 2 years. So it's that's what the case would be if you decided to use it as a loan and for other purposes.
Very good. So as of now, if I did apply and I received some monies, I would have to pay those back at a later date at a 1% interest.
That's right. Mm-hmm. That's right.
Clarifying that. And then the other thing you shared with me was just go through my bank. So go through your bank, or if you have PayPal, you can go through PayPal, or how can you go? And you also said don't wait because the money's maybe running out.
That's right. And I'll retract a little bit what I said. I believe the term is up to 5 years. So I believe they give you up to 5 years to pay that back.
Oh, okay.
So yes, don't wait because as we know, the first round was depleted relatively quick. I believe it was 3 weeks and the money was gone. So don't wait to do that. Do that as soon as possible with your bank. Your bank should be the first option. Otherwise, you could try Square or PayPal. They're doing it as well, or maybe some other local bank would be a good option, but you would want to hurry up and get that in there.
Okay, great. That's great news. I did not realize that was still open and there were still funds available for those who want to take advantage of that. That is really awesome news, and get on it right away.
Yes, 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 because some banks have stopped their funding, but there are still other banks who are oh gosh.
That's okay. We're all working
I'm back.
from home these days. We have a few technical difficulties. That's all right.
Yes, I am back.
That's all right. Hey, I wanted to mention that Nicola's office is located in Midtown at 75th and Warnell in the Waldo and Romanelli area. Of course, we're all working from home now, and but we're getting ready to kind of groove back into our outside the home offices, right? Pretty soon here.
Right.
So she's very conveniently located, and I just want to thank you. And the name of your company is, please say it for us.
Yes, so the name of my company is B2B Mobile Tax and Solutions. And yes, as Judith said, we are located in the Waldo area, 75th and 72nd and Warnell. I do taxes virtually as well through our mobile app. or in office. So, yeah.
Great, good. Thank you so much. And anything, did we miss anything that's like a new rule that came out recently that we all need to know about that might affect us sole proprietors who are getting ready to pay our money here?
Not yet. They're consistently updating and issuing guidance on various things. So I'm staying on top of that. But one note that I would like to mention is that as sole proprietors, you also want to check your Social Security account. So the taxes that you're paying in, these quarterly estimated taxes that you're paying in, essentially you're paying into your Social Security and your Medicare. So you want to make sure that these payments that you're making is getting credited to your account. And you can do that by logging into the Social Security website and creating you an account, and it should show you those deposits and what your balance is there as well. And that's extremely important as sole proprietors to make sure that's happening.
So our estimated tax, the whole amount goes into our Social Security account?
Well, not the whole amount, 15.3%.
Okay.
Of that. So
very good,
yeah.
Nicola. Thank you for that, because I didn't realize that, and I'm going to definitely check that. I know you encouraged me to open up my IRS online account, which I did, which I was kind of slow on doing that, but I did that, and I will definitely go in and check my Social Security and make sure that's getting credited. That's great information.
Yes. Yeah.
All right. Well, thank you so much. And I sure appreciate you so much. And I have an appointment to see you next week to get more good news.
Yes.
Thank you, Nicola. Thank you so much.
All right. Thank you for having me, Judith. This was so fun.
It was fun. Thank you. And I hope we shared some good stuff with everybody. I think we did.
Oh, yes. Me too.
We'll talk to you soon. Bye-bye.
Okay. Bye-bye.